Assalamu alaikum and welcome to the Oasis Focus and Finance Show. I'm your host Shaikh Morton. May I wish you and yours a Muharram Mubarak and may next year be a prosperous one, inshallah. Last week we discussed the kinds of taxes that you can encounter as a South African taxpayer. This week we look at economy and the taxes. Should you have any questions, ask us. Our SMS line and email address will be on screen during the show. Today we look at taxes and the economy. Firstly, we have a look at the South African situation. Secondly, we have a look at the global issue. And thirdly, we have a look at the tax outlook in general. Joining me today are senior investment analysts Fahad Shaikh and Isma-el Ebrahim. Gentlemen, assalamu alaikum.
Wa alaikum salam.
Isma-el, the first question. Taxes are as old as the Babylonians. Even the ancient Egyptians had tax problems. So how do we understand it in today's context?
Shafiq, I think, as you mentioned, tax has been around since time immemorial, with every organized society having some form of tax. If we look at the Islamic society, we pay a form of tax in the form of zakah, and it's for the greater good of our fellow human beings. We all have a responsibility to promote equality, to assist our fellow human beings, and to assist our governing parties or political parties in governing society. Governments have a goal of promoting individual freedoms, and with that there needs to be some sort of investment or some sort of economic and social programs that they put in place. And in order for government to govern, they obviously need revenue in order to fund their expenses. And these expenses can be towards social and economic programs, as well as public goods and services, which include hospitals, schools, universities, clinics, roads, etc., as well as defense and security. And in order to fund that, they need some sort of mechanism to collect revenue. And that's why tax is important. Further to that, contributing to the tax pool, to the greater tax pool, is important in that it allows the government to spend on these type of things for the greater good of society and for the long-term sustainability of society.
Fahad, let's go to the next question. South Africa seems to have the same issues as other developing countries in terms of tax. But how do we see and how do we understand the global challenges?
I think when we look at tax globally, we need to split the countries up into broad categories. Firstly, if you look at the developed world, which includes the likes of the US, UK or Europe, they face very different dynamics. Since the financial crisis, all these economies, government expenditure ramped up just to support economic growth. So in US and UK and Europe, we saw government deficits widening. Basically, they were spending more than what they were getting in taxes or what they were getting in revenue. But over the last 2 years or 3 years, we've actually seen these things creep up, for example, in Greece, where those budget deficits increased to unsustainable levels. So we've seen that in those economies, governments have started to become more responsible, or they've had to become more responsible to make sure that they start closing that gap between what they're spending and what the revenue that they're taking in. So that's the developed world. Then within emerging markets, again, you need to split it up between those emerging markets which are oil importers and those emerging markets which are actually oil producers. So if you look at the first category, which even South Africa falls into in terms of being an oil importer, over the last few years, over the last 5-6 years in fact, these countries, including South Africa, Brazil, a lot of these emerging markets faced a lot of foreign flows coming into these markets. What that really allows governments to do is that it allows governments to spend more than the revenue you're generating, and you fund that gap by issuing debt to foreign investors. So that still allows you to sustain yourself to some extent. Because firstly, if you look at emerging economies which are actually oil importers, South Africa falls into that category, Brazil falls into that category. These countries have benefited from very large foreign inflows over the last few years. What's that allowed them to do is that you can still run a budget deficit and fund that deficit by raising debt from foreign investors. But now going forward, as we approach an era where monetary conditions are likely to tighten or normalize again, a lot of those foreign flows could start, some of it has already started to happen, but it could accelerate in terms of foreign flows tightening up, which won't allow governments to continue issuing debt. So for example, in a lot of these economies, including South Africa, we've seen that governments have started, they need to become more responsible in terms of managing their expenses and tax collection. And then lastly, if you look at emerging economies which are actually oil producers, which includes your Middle East, even Nigeria and Africa, in a lot of these countries, between 40 and 90% of their government revenue was coming through oil. Now, with the way oil prices have halved, it puts a lot of pressure in terms of their budget, in terms of the revenues the governments are generating, and their ability to spend, throughout the economy or to spend on some of the social aspects of society that Isma-el spoke to earlier. So I think what we could see going forward is that in a lot of these oil-producing economies, they will need to be more creative in terms of diversifying their revenue base. And it wouldn't be surprising if some sort of taxes start kicking in within those oil-based economies. Because historically, if you look at the Middle East, none of those economies have any sort of personal income taxes or corporate income taxes because they've been able to sustain themselves through the oil revenue. But that might change if oil prices continue to stay at the low levels that they are right now.
Isma-el, the pain that most people feel is when they go to the dentist. The second pain is when they have to pay tax. So how do our tax rates and regimes compare to other countries?
Shafiq, I think you've got to look at it in context before being too pessimistic. Like I indicated earlier, with zakah and contributing for the greater good of society, that's the ultimate long-term sustainability of society. That's the ultimate benefit that we'd like to contribute towards. From a tax perspective, South African tax in comparison to global rates, if we look at the nominal rate, it's probably on the higher end at 41% relative to global averages at around 31%. Within that, our business, that's the personal income tax. On the business or the corporate tax side, we also on the higher end, 28%, compared to global averages more or less around 24%. But within that, we've got to look at our tax pool. And if we look at our registered taxpayers, our tax pool is only about 7 million people. So if we compare to some of those global countries, they've got a much larger tax pool, and they therefore can collect from a bigger tax base, which allows for higher revenues. In our case, only 7 million, of which only 1% of that 7 million actually contributes to the personal income tax levels. Over and above that, if we look at some of the other taxes, so while you've got individuals tax, you've also got corporate tax, but then you've got other taxes like value-added or value-added tax, etc. Within that, if we look at our value-added tax, that's actually on the lower end compared to global averages. So we're at 14%, global averages are at about 16%. And then another very important aspect that we shouldn't forget is that in South Africa, so globally, a big part of the tax pool, of the tax revenues collected by governments include your social security contributions. You see in the US when you watch the movies, people are talking about their social security numbers, and that's largely got to do with their social security system. And to set up something like that, they obviously need to fund that. So on a global scale, social security contributions are closer to, I think, above 20%. And in South Africa, we're only at about 3%. In terms of our social contributions, our social security or social grant contributions. So from that perspective, we're on the lower end. Now, take into account that we've got a much lower, smaller tax base. Our VAT and social security contributions are lower. I think in aggregate, I'd say that our tax regime in comparison to global countries or to our peers would be more or less neutral. So I don't think we are worse off. And I think we're more or less in line with global trends on aggregate.
Okay, Fahad, with the pain not so bad, as Isma-el has just indicated to us, how then are rates determined for South African taxpayers, and how does it impact them generally?
Look, when the government looks at setting up your tax regime, it's pretty much how a household would manage their own budget. You look at what your expenses are, what the economy needs, what areas you need to spend in, what issues need to be addressed. And based on that, you come up with, how much revenue you actually need to raise to address those issues. So in a similar manner, the National Treasury or the finance minister would look at South Africa's requirements from a financing point of view, and that to some extent would determine what sort of revenue or tax regime that they need to have. A very positive part about South Africa is that if you compare South Africa relative to some other countries in terms of openness of information, in terms of how much revenue you're generating and where it's being spent, we rank in the top 5 out of almost 102 countries that survey looks at. So we can actually go to the national, for whoever is interested, they can actually go to the National Treasury's website to actually get a breakdown of where the money is being raised from and where it's being spent. And as far as implications for the South African taxpayer goes, it actually depends on what type of tax you're talking about. If you look at sin taxes, which are taxes on things like tobacco, we've seen that they normally impact the lower income consumer a lot more, because a larger proportion of their income is going to areas, for example, like tobacco consumption. If you look at something like fuel levies, which is also a sort of taxation, it usually impacts the middle to high income earners more, because they're the ones who are bigger consumers of things like petrol and diesel. Then VAT, that pretty much impacts everyone across the board, because very few items would actually be zero rated. And any increases in VAT or decline in VAT rates would impact pretty much the entire population. But the biggest thing, the most progressive taxation comes through when it comes to personal income taxes. Isma-el spoke earlier about the 41% marginal personal income tax that we have in South Africa. What that really does is that it impacts the highest income earners, and that's one of the key sources which addresses your income inequality. If you look at it in South Africa, your 10% of your top earners pay majority of the income taxes. And I think that's one of the key mechanisms for transfer of wealth from the rich to the poor, which also results in lowering your Gini coefficient. It helps address the inequality in society, and it also introduces social stability. Because, if you look at South Africa, a very large proportion of our population still survives on social grants. Almost 16 million people in South Africa would still receive some sort of government funding. So I think direct taxation, goes a long way in addressing that.
You're watching the Oasis Focus and Finance show. We are talking about taxes. When we come back after the break, we're going to ask the question, are we getting our value for money as a society?